Welcome back. Futures are indicating a decline at the start of trading. Take a look at where we are. We are now at the lows of the morning. The Dow Industrial is down 342 points right now. The S&P is down 46 and the Nasdaq lower by 150. The Federal Reserve's final meeting of the year kicks off next month. That's December 13 and 14. Federal Reserve President James Bullard says that the Fed needs to continue raising rates by at least another full percentage point. It comes after the Fed's previous 4 straight 75 basis point hikes. We're going to talk about the macro story right now, investing in it. Joining me right now is the co-founder of the Carlyle Group. He is the author of the new book, How to Invest, Masters on the Craft. Author David Rubenstein is here. David, it's great to see you.
My pleasure to be here. Thank you for having me.
Thank you so much. I love this book, and I know you know a lot of these guys just from your own personal life and doing business with them, but you sat down with them to talk about a specific issue, investing, allocating capital in what has really been an uncertain macro story. So let's start there. What are your thoughts on where we are right now? Assess the macroeconomic backdrop.
I don't think it's a foregone conclusion that we have to go into a recession. I think most experts would say that probably next year it's likely we'll go into recession, but nobody knows for certain. Depends on what the Fed does. If the Fed increases rates 50 basis points in December, it's not a foregone conclusion that will push us into a recession. Go up 75 basis points, perhaps, or 100 basis points, we could. It depends on what the Fed does. We might have a soft landing, but it depends on the Fed.
Well, I mean, look, the IMF has already taken their global growth number down, talking about the economic outlook getting gloomier on the global stage after predicting growth will slow to 2.7%. Thomas Honig is a regular on this program. He is the former president of the Kansas City Federal Reserve. And he said to me, there's also the Fed's unwind of the balance sheet. And you're talking about, what, $95 billion a month that they want to unwind and not continue this buying of securities. What does that mean in terms of liquidity? You're taking out $1 trillion of liquidity in the year. Do you think that's going to create a disruption for the market?
It'll have some impact, but I don't know that it will have an impact that will lead us into a recession necessarily. Right now, inflation numbers are coming down. The budget looks like it's in reasonable shape. The deficit's coming down. So I would say if the Fed keeps ratcheting up interest rates, it's likely to give us a recession. But if they kind of moderate what they're doing, it might not.
Okay, so let's talk about investing in this environment then, allocating capital. Who did you lean on in terms of getting the best ideas in this book? And I bet you probably took away some little gems of ideas that even maybe you didn't know about, given the level of people you've spoken with.
Well, they're all very smart people, and they all have certain things in common. The most common thing they have together is that they all defy conventional wisdom. The great investors all say, I'm not going to go with the conventional wisdom, and they've all proven themselves to be right. They also tend to be very smart, math-oriented. They like to make decisions. They tend to be people that can get over mistakes and go on to the next thing pretty quickly. They don't just linger with their mistakes forever and just hold on to them. If they make a mistake, they realize that they go on to the next thing. They all tend to be pretty strong type A personalities, and they all tend to come from reasonably blue-collar families or lower middle-class families, not from upper-income families. You
also touch on a number of different investing strategies. You've got distressed debt, you've got long-only, you've got short. What kind of approaches do you think work best?
Well, clearly, there are different types. I say there's mainstream, which is stocks and bonds and long only. There's alternatives, which is private equity and so forth. And there's the new things that I've called the cutting edge, which is like cryptocurrencies or ESG or things that now are more risky, let's say. And I would say none is perfect, and you don't know which one is going to actually work any given time. But the best thing to do, and I like to recommend to average person, the average person should not try to be a great investor. If you have a day job, if you're a doctor or a dentist, don't think you're going to be Warren Buffett. That's not likely to happen. Yeah. Probably go into an index fund and just call it a day. If you really want to learn how to invest, put the time into it and the energy into it. And I encourage people to go into investing because I think it's a good profession. And I think it makes very good things for America. For example, the venture capitalists that put money in Moderna did a good thing for our country, made Moderna a really strong, viable company, and look what they did for vaccines. So I think investors do a good thing for our country by allocating capital the right way, and I think people should look at investors as doing something productive for our country.
Which is why I believe that sharing intellectual property and making it available to everybody is wrong, because what you have in the Moderna situation is somebody who had the courage to take the risk, to invest in a situation, and look what it yielded. yielded. Now, if an investor says, well, I'm not really going to get any benefit from this, I don't know that I'll ever see any yields from this because everybody has the same intellectual property, then maybe they won't invest.
You're right. And so what's made America great, among other things, is that we have an incentive to invest and get the benefits of that. And that's what made our country, I think, work pretty well. Moderna is a classic example of that.
Yeah. So you mentioned crypto. What do you think of crypto?
If you go to Las Vegas and you like to gamble, you know you're going to lose money.
Yeah.
So if it gives you pleasure to gamble, okay, so take the amount of money you're happy to lose, fine. In crypto, maybe it's the same thing. If you like to watch the oscillations up and down and tell your friends about how much money you're making or how interesting it is, fine. But you're probably going to lose that. So if that is okay with you and you're losing some money, okay. Generally, it's a very complicated area. It's not for, I would say, people who are not professionals. I think the industry is not going to go away because there are a lot of people around the world who are still going to invest in this. Even if FTX has all the problems it has and other companies have problems, it's not going to go away overnight. It's just not going to, in my view.
But do you see a contagion issue here? I mean, crypto trading platform FTX bankrupt, now facing class action lawsuit by investors claiming the company violated Florida law, made consumers suffer more than $11 billion in damages. You've got celebrities on the hook: Tom Brady, Stephen Curry, Shaq O'Neal, all listed in that suit. Should we be worried about this beyond just the crypto holder and the crypto
Well, we
space?
should be worried because it's very risky and it's very complicated, and people don't have the information they would have if it was properly regulated. It really isn't regulated, and so it's the Wild West to some extent. But I don't think it's going to completely go away because there's going to be some interest around the world in this kind of a currency which nobody knows you have. So, for example, if you have your assets taken away, if you're a Russian oligarch, your assets are taken away, people around the world would say, well, I don't want my assets taken away if my country invades Taiwan, for example. So some wealthy Chinese people might say, I want to have some things in assets that nobody can know I have, and then nobody can take them away. So I don't think it's going to go away completely, but clearly it's been damaged a great deal, and a lot of people are going to be suffering from this.
Yeah, and we're going to keep an eye on that one. You're in Washington. You have always been a student of what's going on in terms of political and how it is married to the economic subjects. What are your thoughts on what just took place in the midterms, and do you expect policy to change? Policy matters, as you obviously know very well. What is the result of these midterm elections in your view?
Well, obviously there was some surprise. I think it was expected to be a red wave, and it turned out not to be a red wave. I suspect that the House won't get very much done because there's not going to be enough support on one side or another to get anything done. The Senate is going to be divided, probably almost 50-50, so not going to do that much. There's not a lot of spending room right now. We don't have a lot of money because the deficit is pretty big and the debt is pretty big. I think that there's going to be a lot of treading water, and there'll be a lot of the only things they're going to pass are appropriation bills, debt limit bills, things that we have to pass or to keep the government running. I don't think you're going to see any major legislation the next 2 years.
David, is that a good thing for markets and the economy?
Well, it's not necessarily a terrible thing because we want to keep the debt and the deficit down. And I think right now Washington could use some diversion from other things. I don't think we need to have the big fights we've had in the last couple of years, last decade or so. So I think it's not a bad thing. And obviously we'll see people already running for president. So that will continue for the next 2 years.
Final word here. How to Invest, Masters on the Craft is the book. What was the most important takeaway, an idea that you took away that you didn't even know about before you spoke with all of these people?
I think the most important thing is that you really have to prepare, know what you're doing. You just can't get lucky. If you think you're going to get lucky, you're going to lose a lot of money. Prepare, do the research, know what you're doing, and have some self-confidence in what you're doing. And if you make a mistake, admit it right away and go on to the next thing.
Yeah, be flexible enough to do that. And my one highlight over years and years of seeing various cycles is if it looks too good to be true.
It is true.
It probably is.
It's not going to happen.
Exactly.
Nothing is that great.
David, it's good to see you.
Thank you very much.
Always a pleasure.